Hi everyone. Hello again if you heard me 5 minutes ago. And we are ready to go. How's everybody doing this evening? You should be hearing me fine. You should have a slide up that says great trading. You should see a little red ball dancing around and we are good to go. Everybody doing well this evening? A couple quick introductory comments. Let's go to the next slide here. If I sound a little off my usual voice, I've been battling just a little bit of a flu or something. I'm okay, but I'm, just a little listless, so to speak. So if I don't sound my usual self, that's the only reason why. Also, quite honestly, I had a losing day today, which I didn't like. I had in all of July has been nice winning days. I feel like I'm on a nice little month, and I've been a little bit off lately, so it was nice to see a recovery. But today I did not get much right. I had the market understood, but I just got the wrong thing short, the wrong thing long, and so anyways, no big deal. But just a little bit under the weather, so I'm gonna not be screaming and yelling like I normally do. I do want to end at 6, and as usual, I've put together about 6 hours of information to do in 60 minutes. So let's get through it and get right to it just as quick as you can here. I want to remind you this is a two-part event, which is going to be tonight and tomorrow. It's not really two parts. Tomorrow is not really related to today directly. The reason, quite honestly, I did this kind of a back-to-back thing is because if I did tomorrow all by itself, nobody would be here because tomorrow is that famous topic that is so boring nobody wants to hear it, but yet between these two, tomorrow will make you way more money than today, quite honestly. Tomorrow is probably not terribly relevant to you if you are not trading or investing yet, but if you are, tomorrow is the closest thing to the secret sauce as anything is. And also tomorrow is not going to be recorded. Today is, and it'll be available at the usual places sometime tomorrow, but tomorrow is not going to be recorded, so you have to be here if you do want to hear it. So today we're going to talk about what is great trading, and I really didn't know what to call this because it's kind of a hodgepodge of things that I want to say. In my head, I have so many things I want to transplant to people who want to learn, and quite honestly, even though I feel like I'm a pretty good communicator and people tell me I am, sometimes I have a hard time getting across certain points that are very difficult. So tonight's topic is called Great Trading, and it really is that line right above it, right here. This is the bottom line summary. It's not anything, it's everything. And I don't know how else to phrase it, but I'm going to go through a lot of examples tonight to try and show you what I consider great trading to be, and we're going to look at a slide that's going to outline those in just a second here. And we're also going to talk about the 3 bullet points here because those are common things people relate to great trading, and I want to discuss those as well. So here's our checklist for tonight, if you will. What do we look at, really? Most of you probably know the answer to that question. So we're going to go on to say, well, if we look at that, does it matter for day trading or for long term, does anything change? And then we're going to go back and say, okay, so I knew that answer, but is that really what matters? I mean, prove to me that's what matters, and I'm going to. And then the next question is, well, okay, if that's what's so important, then what else matters? We're going to talk about that. And I want to talk about a phrase that I use a lot called the language of charts. It's what I guess my little nickname is for what I choose to call the way I teach things. So before we get into that checklist of what it is, let me talk about the items that are here on this title slide that was sent out to everybody to register for this. Is great trading? Is it the quest for perfect patterns? Is it a great watch list? Is it a no-fail strategy? All those things sound really good. The problem is sometimes that you can get lured toward things that sound great but aren't always particularly helpful, and that's what I want to try and help you to. Tonight's discussion, some of you I think are going to just soak it up. Some of you are going to get it. Some of you are going to be a little confused. I'm kind of talking to you at like a mastery level. In other words, I'm talking to you, there are all kinds of things that we learn as we go to trade, and amazingly, just like in so many areas, that what you learn is the right way to do things all of a sudden isn't necessarily the right way when you reach a certain level. It's hard to explain that or understand that, but there's a lot of other examples you can relate to in anything else in the world pretty much that getting that last level often involves changing the norms that people think are involved in getting that level. Hey, Carmen. So let's take a look at these and I'll try and explain to you what I mean. Is it the quest for perfect patterns? What we're trying to answer, folks, is to be a great trader. By trader, I use the term very generically. Long-term trading, short-term trading. I don't care. To me, if you're involved in the market, you're a trader, because if you're not a trader, not trader like Benedict Arnold, but a trader, if you're not a trader, it means that you are a buy and hold type person, which, at least in my humble opinion, has been dead for a long time. That's not the topic for tonight, so I'm going to move on. But is it the quest for perfect patterns? What I want to get across to you is not necessarily searching for the wrong things. It certainly sounds good, the quest for perfect patterns, and I wouldn't be surprised if sometime years ago I said that that's a good thing to call trading, the quest for perfect patterns. But the truth of it is, when you reach a certain level, it almost becomes the opposite of that. And let me explain what I mean. First of all, what is perfect is subjective in trading. Our goal as traders, when everybody enters the market for the first time, they're probably 100% subjective. Would you all agree with that? When you first enter the market, whenever it was, or if it's today for you, you come to the market, your first trade is probably very subjective. I think this can't go lower, I think this can't go higher, I think this is a good buy, I think this is worth more than what it's trading for. I think they have good earnings, right? It's all very subjective. You don't have criteria that you can duplicate. And our goal, of course, in becoming a good trader is to become as objective as possible, to take and be able to use criteria that can be duplicated and replicated. However, it is not able to be done to the last percentage. We want to get as objective as we can, but the truth of it is that there is some subjectivity that will always come into the marketplace. It is not a mathematical science. There is no black box trading system that works. There is no. It's why engineers and architects get frustrated sometimes, because they want mathematical precision. And it simply is not there. To some degree, there is some art involved, and it should be as little as possible, but there is some art involved. So another way to look at that is to say that I have been involved with other traders, and some of them are what I would call good traders. And yet we can disagree on whether a pattern will work or not. Does that make sense to everybody? And it doesn't mean I'm good or I'm right, or that they're good or that they're right, but that two great traders could disagree about a particular setup, a particular trade, a particular chart. Does that make sense? Everyone else? Got a whole bunch of people there. Does that make sense, guys? I want to make sure you're just kind of following along here and getting what I'm saying here. So that by definition means it's somewhat subjective. And even yourself, even you personally, I bet you anything, thanks Jamie, I bet you anything that if you were to show me, your last 10 trades or investments, I'd be able to certainly prove to you that you were not objective completely. I'd be willing to prove to you that they weren't what you would consider to be perfect trades in any way, shape, or form, right? And the other question is, what if your definition of perfect, what if you're pretty good and you really have a great definition of perfect? What if it shows up every 2 or 3 weeks and you're a day trader? What do? You just starve in the meantime, waiting for the perfect pattern? Or you risk $10,000 in that one trade because it's a perfect trade? See, it becomes very, very difficult. And the other issue is this next one here is, would you rather have a perfect pattern and have no idea how to enter it, how to manage it, and maybe take it in a poor market environment? Or would you rather have an okay pattern and you're fantastic at entries and management and understanding the market? I mean, all these things come together and they all make a great trader. And you notice the ... actually our job, here's the key line I want to give you. Actually, our job is dealing with the less than perfect patterns we see every day. Does that make sense? Matter of fact, I'm going to copy and paste that on the screen because I have it typed here as a note to myself to make sure I didn't forget to say it. When it comes down to it, this is actually what trading investing is about. It's dealing with the fact that everything is less than perfect, and how do we handle that, and how do we make money out of the fact that that is what there is every day. Okay. The next concept is great trading based on a great watch list. Well, I mean, a great watch list is something we all do. It's part of the basis for trading. But I have to tell you, and you can probably relate this to yourself, but the number of times somebody will send me a swing trading watch list in an email, and then they'll get back to me a couple weeks later and say, hey, look at A, B, and C. They worked really well on my list. But of course the question is, well, what about what about the list you had number 4 through 10, how did they do? And did you play these, right? See, it's easy to come up with 10 possible ideas and then look back sometime later and say, oh, look, half of these work pretty well. Most people can do that. The question is, are those the ones you took? Did you take them? How did you manage them? Did you make money? This is a whole topic to itself, and if you want to hear more about this topic, I did a presentation on this a while back, and it's on the website. It's called, I forgot the exact name, but it's something like from chart reader to trader investor or something like that. And it talks about the difference between reading a chart and making money from the chart. And this is part of it. Yeah, a watch list is great, but the way I look at a watch list is I don't even necessarily expect on a bullish watch list that things will necessarily move up. If it's a daily watch list, this question right here, if it's a daily watch list and I look at it a week or two later, the way I do a watch list, it's not even the case I think it should be higher. Because a lot of the daily watch list stuff, if it's a bullish list, I will be looking at it to be bullish if and only if it can pass this test. Those are the best plays, really. The ones that have shown strength, that get attacked by the bears, if you're bullish on a stock, and then the bulls are able to overcome the bearishness. Those are the good ones. And until the bulls overcome the bearishness, the stock may fall forever. Does that make sense also, everybody, what I'm saying? And this is where people can get tricked somewhat because, you know, they think they're really good. And again, I'm not putting anybody down. I'm just saying you can think you're really good because you come up with a watch list and you look back and say, hey, a lot of these things worked. Yeah, of course a lot of them worked. But is there money in the bank account from what you did? That's what really matters. So, of course, we need to be able to read charts and form good watch lists. But again, what is tonight? Tonight is what makes great trading. And great trading is taking that watch list and putting money in the bank from it. That's what matters. And the third thing is trading about a great no-fail strategy. Well, there's no such thing. And the sooner you understand that there's no such thing, the sooner you will be on your way to successful trading. This next line here, first we get odds from great chart analysis. Then it is how you handle your winners and how you handle your losers that matters. This is what will define you, period. And if you want to hear a little bit more about that, there are 2 articles called What is Trading? And they're not revolutionary articles, but I think they're very interesting. They define what I consider trading to be. There's part 1 and part 2. I'm sorry there's such a long link. I tried to shorten it, but I couldn't get it to work properly, and I ran out of time. So you can click on those and read those at your leisure. And again, they're not rocket science, but I think it's basically my definition of trading and what really matters. And it relates to tonight, but if you read those, I don't have to talk about it anymore here. All right, so back to our list here. Let's go through these one at a time. What do we really look at? Does it matter for trading or long-term investing? What really matters and what else matters in the language of charts? Let's take a look at these real quick. What do we really look at? What do we really look at? Well, really, truly, no kidding. Hey, you're welcome, Jim. We really, really, really look at charts. I know most of you know that's the answer. Some of you may not. But it is really price action. But many things that you hear make it hard to believe that that's all it is. Now, you know, I've said this before. Whatever else you think it is, I have been around a long time doing this. Like, I hate to even say how long at this point, 19 years. And while I may not be the smartest guy out there, I'm also not the stupidest. And I went through all this, my opening year, I went through what a lot of you probably did as well. And that's why I'm pretty good at teaching this, because I know what you're thinking a lot of times. And I looked at fundamentals. I looked at recommendations from analysts. I looked at everything from, you know, the short interest to any other thing you want to throw out there. And you know what? The bottom line is it's all just crap. It's just what it is. Because all of it is telling you, or somebody is telling you, what they think might happen rather than the simple truth about what is happening. And I know it sounds like a cliche about charts, but it is. It's the truth about what is actually happening. And yes, you can read a lot by looking at a chart, because the chart shows a continuous battle between the bulls and the bears. And it shows who is winning every battle, who's closer to winning the war. And that's what I really want to see. I don't care who says who's stronger. I don't care if the CEO says they had a great quarter. I don't care if they say they're going to have a better quarter. I don't care if an analyst upgraded. I don't care about any of that stuff. I don't care what their book value is or anything else. If the price is dropping in a systematic manner, it means that there is more money selling it than buying it, and that's all I care about. And that extends to every stock, and it extends to the entire market, because the market is nothing but the sum of all stocks. Now, as I go through a couple of examples to help show this to you, and again, in my head, this is so crystal clear. I have a difficult time discussing with somebody because it's like the person is discussing whether or not the sun will rise in the east or the west tomorrow. But I want to try and show you some things. And when I do this, please understand, I don't want to come off braggadocious. I'm not bragging about me. I'm bragging about technical analysis and how well it works. And I just want to show you some examples where you're left scratching your head if you don't believe that it is all in price action. And I want to give you some little, for those of you that know that already, I want to give you some clues about some things to look at. Here's some things I want to look at. I want to look at the market call 2 weeks ago, the last month's news events, and just a quick comment about today. Today we're down because of the escalating trade war. I find that absolutely comical, and I'll explain why once we do the other two. So let's go through each of these. Market call 2 weeks ago. Some of you who follow me closely, I know most of you here as guests, but some of you subscribe to a letter I put out that's a day trading letter. It comes out every day. And it gives a market outlook up here in terms of the short term, which is it gives it in terms of the day trading outlook, which is just that day. It gives the midterm outlook, which is the next several days or a couple weeks, and it gives the long term. That's the big picture outlook. This big picture outlook, you see where that arrow is? That's been there for 9.5 years. It's never moved from there once, period. And there's probably people here that could testify to that. But I mean, there's a period of time I wasn't doing a letter at all. But I mean, before I did it, since I've done it, it's always been there. That's the big monthly, sometimes weekly chart. Where are we going? You know, that type of thing. That's still pin bullish. The midterm outlook can change. And the point of this here is that this change on June 14th. Here's the chart. Now you can see, you can go back, you can look at your own charts if you want, because this is kind of small. But it's June 14th. I went to a bearish midterm bias, and it's the first time that this chart indicated that this little outlook indicator is in the red since the end of March. Now here's March. This thing was either green or in the yellow the entire time until this day. This day it went red. Okay? That day it went red. On the day it went red, it was comical. I said it to the rooms. Why? There were headlines that I saw on several different, I get an email like you do, I like to just hear what people say for fun, and a couple of the headlines. That day, market heading higher, and I can see higher prices coming in the market on the exact day that I said, you know, we're going to drop for a couple of weeks. Now, I had two target areas. Do I have the next chart in here? I forgot what I put in. And my question to you then is very simply, why? Why a bearish bias? And you have to look at your own chart here. Because I did not include, I did not include since then. Where is that? What is that? That's the same chart. But from starting with right here, it was bearish. And if you look at your charts, you can tell we just dropped. We dropped down to this area right in here. Why? Well, it's all technical analysis. I mean, there was nothing else out there in the world. There was certainly not bad news those days any more than any other day. As a matter of fact, every market pundit said we're going higher on that day because because this rally popped a little bit above here. But yet I had it at a short call. It's all understanding technical analysis. If you think it has something to do with news, that's what I really want to be emphasizing here. Can you think of all the bad news that we had from March until a couple weeks ago? Can you think of all the bad news that came out? Remember Italy? Do you remember when Italy had their crash and panic? Everybody saying that's, this is it, look out, sell everything you got, we're going to fall. I mean, nuclear missiles being fired over Japan, all the different political things going on. What else was the trade wars, impeaching the president, all this stuff that's been going on. And yet, that entire time, green bias across the board. And here, no bad news really to speak of at all, and all of a sudden, boom, red. It's all understanding the chart and technical analysis and where things are and the fact that this is not going to pop higher from here. Now, I wish I had the next chart in here. I'm sorry I didn't put it in here. Oh, wait a minute. I'm logged in over here. I can, I'll pop it up for you real quick. If you don't, you have your own charts to look at. You have charts up there? Can you see some charts? Yep, yeah, okay. So here's the QQQ, and there's the daily chart. So we're talking about, I actually made the call right here on that day. The next day was green, and then we fell 3 days, retested, and then dropped for 2 weeks. And once we were here, I simply said very clearly it's 50-50 whether or not we hold this area or we come down to here. And the area would have been right here. Now, again, the long-term bias never changed. That's, for being bullish. But this was called as a short-term bias drop. And once we came over here, I'm all back to just green, 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 green. The point of this, again, is very simply, it's all done by technical analysis. And this is done all the time. And sure, I'm not right all the time. It's about odds. But you can't do that any way else. There's no concept of fundamentals in the market, economic news and data. It's crazy to try and look at all that stuff. If we went over the list I started to look at the headlines from here to here. If we were to look at the headlines from here to here, I could fill up the rest of the hour talking about the bad news that was out during that time. None of that matters. Now, what's funny is, what kind of cracks me up is that the reason it is difficult. Well, let me do the next few slides and explain why it is so difficult for the average person to understand that this is what it is, because we are trained every day that that's not what it is. And I'll tell you what I mean in a minute. A recent example again of news. The orders were out one day, durable orders or something, came out, market got hit, and boom, 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 boom. Everybody's talking about this is it. Stuff like this can't continue to happen. The economy is going to slip, and all the stuff about trade wars going on, and that's it for the market. And of course, this news report came out. And let me just switch to the chart that day. Here's the chart. Here's the news report where it came out that day. And this is like a month ago, but it's just another great example. This happens almost every day. And that caused that little topping deal. It came out at 10 o'clock. The market pulled in for a few minutes and then flew higher again. Right? And of course, what is hysterical is what this says here. If the market would have dropped that day, this would have been the reason. And traders and investors would have seen how important factories are as part of the market. Do you understand the importance of what I'm saying here? I know this may sound a little bit boring right now, but do you understand the importance of what I'm saying here? Is that we are conditioned all the time that these news events affect things, because the market either goes up or down, and whatever the market does, the pundits, the news people, have the stories on either side to justify it, right? No matter what it is. But these things are not moving the market. They never do. Only incredibly shocking news will actually move the market. All this stuff never does. But the way we're conditioned, the way we're trained, the market drops one day and say, oh, it was factory orders. I got to pay attention to factory orders. That's what did it. And the market went up that day. It would have been blah, 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 whatever the news story was that was bullish that day. And that's all that it is. But these things are not moving the market. They are the reasons given after the market moves. So, if you're sitting there listening to news stories and that kind of stuff, reading fundamentals, reading economic data, you are not only, quite frankly, wasting your time, but you're hurting yourself, because these things will only influence you in a poor way about what's actually happening, right? Am I making sense to anybody? Does that make sense at all? And, the topic today is about being a great trader. And to do that, you have to look at the right things. And getting this stuff out of your head is extremely important to do. It just doesn't matter. It doesn't. Nobody will ever prove to me it does, because I've seen it. I have lived the market every day for 18 years. Every day. I see this stuff every day. And this stuff just simply does not matter. Look at this next one. The market went up that day. The same day I'm talking about, the market went up, right? So in the morning, a terrible jobs number, look out investors, look out traders. The market goes up. What's the story at the end of the day? This is actually hysterical, right? Of course, ignore the NATO news. Why does the market care about NATO? It could care less. It could care less. What's the reason? Listen how incredible this is. The reason given that day, after the numbers didn't move the market down, was at the end of the day, the jobs numbers from last Friday, this is Monday night, the job numbers from last Friday were so good that they overrode the durable orders numbers, and therefore the market rallied. Is that not hysterical? I mean, this is really at the level of being comical, if you really see what's going on here. You get it? It's just comical. And what's even more comical is that a couple of months before that, the job numbers were also good. They were even better. Do you remember this day? And the market dropped that day. Why did it drop? Because it was overbought at a resistance level, so it dropped. But what was the reason it dropped? Well, because the job numbers were so good that now we have to worry about interest rates going up. Do you see what I mean? If I were to ask the smartest economic person in the world about how these numbers were going to affect the market, they'd be clueless. Because one day the job numbers are good, so the market goes up. The next day the job numbers are good, the market goes down. Well, that's because now they're too good, and now we have to worry about interest rates. Oh, really? When did that come into play? See what I'm saying, everybody? You just have to ignore this stuff. It is all about supply and demand. It's all about price action. It's all about technical analysis. Analyst comments are just dust in the wind. They're just worthless. I mean, a lot of analysts are. If you're talking about economic analysts, people that look at the economy, if you join me, it's a ways away. But when I start the next seminar, let me give you the calendar. When I start the next seminar cycle with people who are in the seminar program, the Friday of the first seminar, I always open up to everybody, and I talk about that in there. So I don't want to go into it now a whole lot, but right, most of them have the economic analysts admit they're clueless, and the stock analysts usually have ulterior motives for the most part, and whatever the reason, they're just not accurate when the analyst is a good bias because. Yeah, and that's true, Glenn. It is. I mean, you said that a little wrong. I mean, technically that would be illegal. But a firm can have their analyst department upgrade a stock and their proprietary department sell the same stock. Yeah, and that does happen, absolutely. The way you said it, if they admitted that's the way it happened, it would be illegal. But they do that effectively, what you said. Yeah, so you have to just, and again, what matters is where's the price going? Not where does somebody say it's going, where is it actually going? So hopefully enough got the point across. Italy. Remember the Italy crisis? Remember the Italy crisis? That was it right there. See that little red bar? If you would have heard the news. Anybody hear the Italy news? Anybody listen to the news? I try not to listen to the news in the morning at all. I listen to a local radio station. It's not really economic news. It's just general news. But, when I heard the news, yeah, that's what it is now, Paul. That's what it was worth. Because, again, if the market would have dropped, they would have said, oh, it's Italy. Why in the world are you still long the market when Italy is going through what it's going through? It's foretelling what's going to happen in the rest of Europe. But guess what? Italy affected the market for about 1 hour. 1 hour. And that was it. And that was it. And then we're done. And we're off to the races, right? Oh, I guess it's safe to get back in now. This is what it's like. I mean, you have to ignore the stuff and look at the charts. All right. So that's the simple answer as we look at charts. I'm going to get into more in just a minute. But before we get there, the question that frequently comes up, I get a lot, well, okay, you're talking about day trading, right? Certainly we care about fundamentals and stuff and the economy if we're long-term investing, and no, we don't. We don't at all. Absolutely, positively not. And I know here some people will say, Paul, that doesn't make sense. It does. Fundamentals, for the most part, are made up and worthless, and they don't correlate to where the stock moves. They just don't. And certainly, you can pull up stocks that are examples, that are great stocks that have rallied like crazy, and they have good fundamentals. But for every one of those, I could show you stocks that have terrible fundamentals that have rallied even more, and stocks that have great fundamentals that have fallen like crazy. Again, when are they going to fall? When are they going to rally? It's all up to the chart. When the buyers outnumber the sellers, prices go up. We see that on a chart. Now, when I say that, something I'm going to get to in a minute, so I don't want to belabor it here, but probably some of you are saying, well, gee, buyers outnumber sellers, pattern goes up, everything's a buy. No, 97% of the chart patterns you see are fairly worthless. Sure, there may be some kind of up move, there's maybe some kind of down move, but they're not clear-cut enough for you to make a trading investment decision. It's a very rare percentage of the stocks that give us clues or indications as to what's actually going on. In other words, a clear pattern of buying and selling where the bulls or bears are clearly winning. So keep in mind when I say, it's just a matter of looking at a chart, I'm not making that out to be an easy thing. It's not easy. Despite what anybody tells you. Oh, by the way, did I just give you the calendar? Yeah. Just to make sure we understand, I like to show this to everybody every time I talk, just to make sure we understand each other. I'm here to help people who want to learn this stuff. But on the homepage, scroll down, if you're bored listening to me, scroll down to where it says warning and read that. If you think I'm here just blowing smoke or whatever, I'm here to try and help people learn this who want to learn it. But I have to tell you, for a lot of people, it's probably not the thing to learn. It's not super simple, but it is learnable. There's nothing different in the long term. The only thing that's different is in long term, as opposed to day trading, you're holding overnight. So it has additional risk and reward, I mean, when you're holding overnight, things can gap. Interesting statistic that I've always known, and I just heard this repeated, that on the market move up, I don't know over what period of time, over the last few years, whatever it was, whatever time period they used, that I think 65% of the move came overnight. Are you aware of that? In other words, sometimes people ask, well, why have a long-term account? Well, because if you are, if you don't have the time, and even if you do, that extra money, most of the move comes overnight. So there's nothing wrong with holding overnight. It's what you want to do. You want to be on the right side of things, but there is that extra risk, just to be certain, that you can have something long that gaps against you to the downside, so you have to manage that risk properly. So that's a difference, is that you're holding overnight. And it also means you should consider earnings dates. Naturally, when you're holding long-term, you're holding for months, you're going to hold through earnings, but you don't want to start a long-term position right into an earnings announcement, because then you're playing earnings, and we don't want to do that because earnings are a mystery. And also long-term, the market may matter a little bit more, and here is why. When we're day trading, it's very easy to get things what I call on their own page. Does everybody know what that means? You get something on its own page. It's something that had some kind of move, some kind of gap, something that happened to it where it just doesn't care about the market. It's going to do its own thing, go higher or lower, right? Not caring about the market at all. And that happens frequently during the trading day. But as days go on and on and on, that wears away. In other words, things don't stay on their own page for weeks, as a rule. Very rare. So if you're going to be holding something for weeks or months, you have to make sure you're on the right side of the market. Does that make sense? But other than that, nothing changes. We're looking at charts, period. And if you want more about that, I'll be discussing it on the Friday that kicks off the next seminar cycle. And again, if you're here, you're a member because you got the invite, and it means that you will get the invite to that Friday afternoon half day. It's called Introduction to Mastering Technical Analysis. It's actually going to be August 3rd. We just finished a seminar cycle, so it's going to be August 3rd. Okay? Let's go on to the next topic. The next topic was, okay, so what really, really matters? We know it's price action. And some of you are saying, okay, Paul, I study technical analysis. I read some videos. I took this class. I get it. I understand this stuff. But it just doesn't seem to work that well. Okay. What's my answer to you? What's my answer to that? Because it's a very common thing. Paul, I took some classes. I took this. I took that. I had somebody email me once and say, Paul, I really like you, but I'm not sure I want to pay for the third time to learn technical analysis. What's the answer to that? Because I understand it for sure. People, they watch a video, they maybe take a one weekend class. What's the answer to that? Paul, it just doesn't seem to work. Well, yeah, trade manager is certainly a big part of it, but I'm talking about somebody that, let's assume they could have managed it properly. They're just not getting in the right trades. They're just not working from the get-go. Well, yeah, lack of a trading plan, sure, that's always, but to do a trading plan, you need this other thing I'm talking about. Yeah, Glenn, exactly, right? They've not really learned it. I mean, there's a cursory understanding you get. I call it the Cracker Jack book of technical analysis, like that little book you pull out of a back box of Cracker Jacks. Certainly everybody gets, that's support and that's resistance and OG, that's a trend line and I know this and I know that. But that is just level 101. And this is where I don't want to come across the wrong way, but you have to understand a much deeper level. Let me give you an example just for fun. And this is actually, and if the person's here, please don't even speak up. This is such a nice example. This is somebody who was occasionally emailing me and sending me some trades he did and say, it was really this great guy, said, Paul, would you take a look at these? And by the way, I've offered to do this for anybody. I sent an email around. And I said, if you want to send me some trades to review, I will do that. I will gladly do that. Just please send me, don't send me charts. I hate when people send me their charts because I can't read your charts. Just send me the symbol, the date, the time, the entry, the exit, what your strategy was. Just send me the basics in writing. But he has sent me a few charts, and he sent me a couple that I did not like, and I explained why, and he was very appreciative and said, boy, that really meant a lot to me. I learned a lot from that. And then he sent me a couple that worked, and I said, great, I liked it. He sent me one that did not work, and you know what? I said I liked it. I said, that was a good trade. It just didn't work. I mean, sometimes that's what happens. We play the odds. Then he sent me this trade right here. This is the trade he sent me. That's what he took right there on the daily chart. And a lot of you know technical analysis, and you have some understanding of it. Anybody want to offer any comments about this trade? He took this long. When the next day traded above this green bar, he took it long. Does anybody want to offer any commentary? Be careful if you do. Oh, Stephen, you are just like the class genius or something. You're like in the front row raising your hand with a gold star. My answer is going to be, if you give me any comment based on this chart, you're not a very good trader because this is one chart. And his comment to me when he sent this trade did not work. This trade did not work. And he said to me, it might have been because of the market. And I said, yeah, that's part of it. But I said, you know what? And this guy, I have credibility with this guy because I just said I liked a trade that didn't work. So I said to him on this one, I would have never done this one. I would have said I would have never done this one. Well, the next bar went up, MM. I mean, he got in the next day when he had a bullish bar. I'm not showing it there, but he had a bullish bar the next day. But it did not work. And if you do not understand, you look at your own charts for a minute on this one. If you do not understand why this did not work, you don't have the necessary understanding to be trading for yourself, because this is not a super in-depth complicated issue. This is what I would call an advanced, well, I was going to say an advanced but basic issue. It is a very necessary thing you need to understand why this didn't work. And I immediately said, no, I would have never taken that trade. It was doomed to fail. I'll go into a little bit why in just a minute. But here's what really matters is we know the price pattern, but number one, there are necessary things that need to be understood from 2 time frames above and 1 time frame below. This is more than critical. Would any of you have gone long this chart right here? And if you give me if the answer is no, yeah, but you would have stopped out, MM. It would have not worked. And because this is why. This was the weekly chart. This stock is NDAQ, by the way. If you can't read it, there's NDAQ. This is the weekly chart to this daily chart. And by the way, you don't really need the weekly chart. You can tell by this pattern that this is going to have a difficult time. And this weekly chart, and I sent him a chart back and I marked it up and I showed him exactly what I was looking at and why the upper time frame, the 1 time frame above, has to be what I call in the sweet spot, and 2 time frames above has to be non-conflicting. And all those terms are things that take a while to explain, and you should understand and learn. And then also on the lower time frame, I'd like to see a secondary sign of strength. When all those things come together, you have a great trade. But until they do, when you're looking at 1 time frame, if your mindset is still, oh, there's 3 bars lower and is a rising moving average, if that's all you're looking at, well, you're going to get some trades right, of course, but you're not going to get enough trades right to really be making money in the market. Does that make sense, everybody, what I'm saying? Does it make sense? Well, I mean, if you want me to comment on that, that's exactly wrong. A doji at the top is exactly what you want to see, actually. If you're buying a pullback, there's always something to your left. And a doji is exactly what you want to see. It's exactly what you want to see. Because it's a single prior pivot. You don't want to see an engulfing, a multiple bar pattern, a failed breakout breakdown, There are a lot of things you don't want to see, but at the prior high, you want to see a doji. A doji just tells you that you may be pulling back. Once you pull back, that's exactly what you want there. And those are the things that I mean, these little nuances that, maybe it only makes a difference of 20%. Can you imagine, though, what a difference that makes to your trading record if you took 20% of your losers and got rid of them? Or if you took 20% of the trades you didn't take and did take them? I mean, it makes a huge, huge difference. So what else really, really matters? Well, besides knowing the chart pattern in general, you have to understand the chart pattern really over 4 time frames, 2 above, the 1 you're on, and 1 below, to really get a thorough understanding of getting the best odds, the best entry, and how to handle something. The third thing then is the market. The day he took this trade, this was the market. And at the time he wrote it, of course, he went back. He actually does not get my daily letter, but in the weekly letter I sent out, I just commented that earlier that week I started a bearish bias. And he read that and he said, boy, you're right about the market. I guess that didn't help the trade either. No, it didn't. If you just decided that you're about to start a 2-week pullback in the market, do you want to take a long trade, anybody? Anybody want to, assuming it's on the 85% of the stocks that make up the market itself. Naturally, there are exceptions. Oil and gold often don't go with the market. But do you want to take a market stock long? This is a tech stock. Do you want to take a market stock long when the Qs are about to drop 2 weeks, if that's what you feel the price pattern is? Anybody want to humor me and answer that? No, of course not, right? So all these things. So number 3 is the market correlation. And again, for swing trading and core trading, it becomes very important. And then the fourth thing to me, anybody know what the fourth thing is? The fourth thing to me that is just so critical, and again, this is such an in-depth topic, I'm offering no no slides. It's the entry in / management. The entry is everything. It can take a winning trade and make it a losing trade. If you do the poor entry, it can take a losing trade and make it a winning trade, quite literally. Does anybody... My famous question I'd love to ask about entries. Does anybody know the number one purpose of a great entry? Number one purpose of a great entry. Even if you heard me say it before, go ahead, help me out. What's the number one purpose of a great entry? Entries do a lot of things. It can provide a tight stop. And again, I don't like the word tight stop because that means to me just simply more stop outs. But it can provide a heightened reward to risk. Naturally, I'm in favor of things that have a great deal to move for a limited amount that I don't want it to move. So it assigns your risk, absolutely. It determines the reward to risk. It defines your risk. But what is the number one job of a great entry? Nobody said it yet. All those are very true. And this is why the entry is everything. Joe, ... You are exactly right. Because the great entry can help keep you out of a trade. A great entry will help keep you. You set a threshold to say, I think this stock's moving up, but you know what? I want to see one more battle. I want to see if you're bullish. I want to see those bears come in and start clubbing me, and I want to see those bulls beat the bears one more time. Does that make sense, everybody? I know it's a very esoteric comment. It's a very general comment. It doesn't tell you what to look for on a chart, but as you could guess, I just can't get into that right now. It's a long, long topic, but to me, it's one of the most important topics in trading. A great entry can help you avoid 20% of your stop outs just by simply saying, hey, I'm not going to jump in willy-nilly. There's 2 types of entries that I use. They're exact opposite type of entries, and neither one of them really align to the high of a bar. He probably did one, I am the compilation of everything I read, everything I heard from others, everything that I decided to absorb to become myself, minus everything I decided to discard. That's what you all are as traders or as people. That's what I am. And certainly along the way, there are probably bits and fragments from all over the place, right? Because I didn't invent technical analysis. I've just tried to refine it and reproduce it in a way that people can understand it. And I've modified a lot of things from what I've learned years ago. There's many things I felt were necessary to do and to change and to learn that are quite frankly not taught anywhere. I think people would agree with that. Nowhere. Some of the stuff I teach is not taught anywhere. Hey, we're doing good on time. I'm actually doing okay. The language of charts. This is what I call the way I teach things. What's the opposite of the language of charts? The opposite of the language of charts would be cookie cutter patterns. If you're learning things, I mean, we all like to put names on things. Here's the head and shoulders pattern and ascending wedges and descending triangles and blah, 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 blah. But all of those are what I call cookie cutter patterns. They're very simple cut and paste patterns that give you an impression of what you want to see, but they really do not have anywhere near the detail to give you a good strategy, entry, anything. Because there's just more than that involved. And this is where a lot of people quite honestly fail, because they look to very, very simple type patterns. And I had somebody say to me once, I was doing a presentation like this, and he said, well, aren't you making things too complicated? Well, I have to say, heck no. I think keeping trading as simple as possible is very, very important. But here's my famous line that I think is very, very true, is that, it's famous to me only, is that in order to make things simple, what do you have to do first? And I think this is one of the truest things about any topic, not just trading. In order to make things simple, what do you have to do first? In order to make things simple, what do you have to do first? Yeah, but how do you master it? You're right. Yeah, you're all saying the right thing, but for me to make my point, what I want to say is, in order to make things simple, at first you have to make it complicated. In other words, you have to get everything in the pot first before you can throw out and keep what you want to keep. I don't know if that makes sense to anybody at all. And one of the reasons I say that is because the opposite of that is the feeling by a lot of people that the grass is always greener on the other side. I've seen so many people learn something part way, and then all of a sudden they're off learning something else, and now they're trying something else, and now they're trying something else because they heard something else, they heard somebody else do something else, they saw another presentation, go, oh, that's so simple, and they just keep hopping around and hopping around. I hate to tell you, but the only way to really learn something is to just, dive into everything you can. It seems really complicated at first, and then all of a sudden you start, clawing your way out of it, and all of a sudden you put your head above all the garbage, and all of a sudden it seems simple. But listen, let me put it this way. It will never seem simple if there are always other things out there you don't understand. Oh, that was a good line. Did you get that? That was a perfect line. I just made it up. It will never seem simple if there are always things out there that you think you don't understand, right? Because you're always going to be looking. You need to get everything in the pot and say, here's everything that there is. What do I want to do with it? And that's what you have to do. So if you're doing something super simple and you're losing money all the time, my answer to you is you're keeping things a little bit too simple, right? Because trading is not super complicated. It is something that the skill level really, not skill level, that's the wrong word. The educational level to understand it is really that of a fifth grader. And please understand, I never mean that to be insulting if you're having a hard time with it. But I think you all can agree there's nothing that is so sophisticated a fifth grader can't understand it. It's a matter of learning it properly, putting it together, getting all the pieces in the right place, and then having a lot of discipline, to be honest with you. A lot of people, it comes down to discipline. There's so many. One of the things, I haven't said this in a long time, but one of the things that's been the biggest thing to me is that a lot of people fail at this. I'm not going to sit here and tell you everybody succeeds at this. A lot of people fail at this. But you know something that's really interesting to me? And this is one of those very rare 100% comments I can make. And believe me, I would not be lying about it because there's no reason to lie about it. And very simply, you would think there'd be one or two people, but they're not. Every time I've gotten an email from somebody that says, I have to quit or I'm not making it or whatever it is, and I've gotten a lot of them, the answer is always one thing. Nobody has ever said to me, Paul, this doesn't work. Never. And in all these years, guys, I would tell you because, hey guys, there's a handful of people that said this stuff doesn't work. Haha, they're idiots. I would just tell you, who cares? I've never, ever gotten an email from somebody saying it doesn't work. Every email has been, Paul, I just can't get myself to do what I need to do. I just keep taking, that trade and I'm not patient and blah, blah, blah. And I don't manage right. It's what the email always is. And it's always, I'm going to be back. I just have to regroup and redo this. And I think it's fascinating. So anyways, what does this slide say? I haven't even read the slides. A language of charts, to me, simply means knowing them well. Yeah, I got to go over a couple of things here in language of charts before I ran out of time. And understanding all the implications of any move and knowing which of these moves are significant enough to act on. Keep in mind, I feel that 97% of the time they are not. They're just random events. And this is where people, I feel, have a hard time with technical analysis because they try to make something out of every pattern. And what you have to understand, guys, if you walk away tonight with nothing but this, understand this, that at least 95% of the charts you look at, there's nothing to learn from them. They are the random walk of the market. People that say the market's a random walk, I agree with them 95% of the time. We do not try to take a random chart pattern and make something out of it. Is that clear, everybody? This is where I feel most people goof up. They feel they have to take a chart and decide what to do with it and make an action on it. Is this clear? That is not what we do. That's how you lose. What you do is you throw away 95% of the garbage that you see, and you look for that 5% where the chart is what I call talking to you, the language of charts. It's simply saying, I cannot hide the fact anymore that there's a big buyer here or a big seller here. And then all we have to do is find a reasonable entry where we can contain our risk and make money. Does that make sense, everybody? Does that make sense? No, it's not super easy. I don't recommend you take up chart reading as a hobby. But it is doable if you can commit yourself to it. Here is something, and this is the last slide, and I just want to kind of a little mini lesson here. What do you think about the 5%? That's right, Mr. Ham. I'm going to assume you're Mr. in today's politically correct word. I shouldn't assume that. Your first name is Jim, but oh, I'm sorry. You're Mr. H, but I'm sure it's a made-up name anyhow. Stock gaps to here. What would you think of somebody that wanted to short that stock? And let's have a real conversation about this. This is going to be the last slide, so I have 5 minutes to sit here and goof. What do you think about this? Stock gaps up to here. Somebody emails me, says, Paul, I want to short this stock on that gap up. This is an intraday chart. There's a 15-minute chart. Stock gaps to that where the blue arrow is pointing, right there. What do we think about this idea? And I want to ask several questions about this because in my mind, in my distorted view of things, this slide will help understand what I mean by the language of charts. It will also help you. I know a lot of you probably attend several events at different places, which is great. But I want you to go in with knowledge next time that you are talking with somebody who's showing you charts, and I want you to ask a question. Anybody? What do we think about shorting? What do we think about shorting that stock? Shorting it, playing it to drop. Igniting bar? No, I'm talking about right here. The chart's covered up. I'm talking about a stock that's going to open right here. We don't know what's going to happen to it yet. The chart's covered up. See this here is all covered up. We don't know if it's going to go higher, if it's going to go lower. We don't know. I'm saying, what if it opened right here? And you just had the bias. And I know you need an entry and blah, 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 blah. I know all that stuff. But I just mean, what about having a bias to short that? I want to draw something out of you. Well, it's not a big gap. No. I mean, this is an intraday chart. Guys, this is an intraday chart. This is a 15-minute chart. So we're going from 37.80 to, we're gapping up 30 cents. It's not a huge gap. Not a huge gap at all. Hey, Joe, good answer. Joe has a very good answer. And it is part of it, Joe. You're absolutely right. But I want to get into something. You want to, if I short it, I wanted to sell off too. Okay. Well, some of you get into what I want to talk about here. Is that some of you are saying or indicating that there will be buyers, that there is support here. So let's deal with that. Everybody, I have a question for you. Why is there support here? This will be one that more of you will answer because it's not asking a general question about a chart. It's very specific. Why is there support here? What about this chart says, Paul, there's support there? And I know what your answer is going to be. Go ahead, everybody. Let me get at least a dozen answers out there. Make something up. Type spaghetti sauce if you don't know. Why is there support there? Spaghetti sauce. Leave it to Jeff. Okay, because there's a pivot. So why does a pivot mean there's support? Why does a rejection mean there's support, Kawa? What about the pattern from the previous 2 days, Frank? Says that there's support. Why does resistance become support? Who's trapped? Who's long? Well, one of the things, amazingly, I thought that, when I said, why is there support, the first thing people usually say is because there's buyers there. And then my question is, well, why are there buyers there? The longs are trapped. Okay, but who's long? Why are the longs trapped? Aren't the shorts trapped? Are the shorts trapped from here, or are the longs trapped from here? Remember, I'm talking about this next day. We haven't seen it yet. Remember that. I'm talking about what's going to happen here forward. I'm not talking about what already happened the prior day. I'm talking about a chart you haven't seen yet. Why are there gap closers? Why will shorts cover it open? Oh, because the shorts are trapped now. Because you're saying these shorts are trapped. What I want you, the purpose of this slide was this, is that we are all, including myself, are used to just simply saying, oh, there's something I learned and therefore that's what it is, right? There is a pivot here. We're over the pivot, therefore we have to go long because there's buyers. Well, Carmen, you can't be confused because I haven't said anything yet. You have to wait till I say something, then you'll be confused. And my point of this slide is that I want you to understand the chart and not to understand cliche comments. Because all your comments are right, by the way. All your comments are right. But the question is, which is going to win out? Which is the battle that will win? Right? And yes, so one of the very first comments is right. We have to look at the bigger time frame. The daily chart was in a downtrend here. Now this is not an email I got. This actually was a trade that I did Monday. I shorted this 1 minute into the trading day. 1 minute into maybe 2 minutes, 1 or 2 minutes into the trading day. Well, here it is. Here's the 9:33, I think it says. So 3 minutes into the trading day, short. I felt very good this was going to drop, despite the fact that yes, there's a pivot here, and despite the fact that yes, at open, people who shorted here are underwater. But there's a balancing act that's constantly going on all the time, and you have to remember that the people who are long were also stuck in this pattern this day. And who's in more pain? The longs that are stuck here or the shorts that are stuck here? It's no contest. And the bigger time frame concept was heading lower every day. Those are the balancing acts. But there are a lot of things to look at in a chart. And if you get glued to one cookie cutter concept, you're never going to have the full picture. Does that make sense, everybody? I don't know if this is the absolute, but I intentionally picked a controversial chart that I felt very confident was going to drop because this is what we do every day. Remember, one of my opening lines was that it's not about finding perfect patterns, it's about dealing with the less than perfect patterns we have every day. And what I actually call my trading, I call it a moment in time. Meaning that it's not about the perfect concept. It's about a reasonable concept with a perfect entry and a great risk to reward. And it wins out hand over fist against trying to find a perfect pattern without all the rest of the above. I'm not going to ask if that made sense or not, because if the answer is no, I don't have time to explain it. And if the answer is no, it could take a long time to explain. It's difficult to explain. But to me, it's the language of charts and finding that moment in time where great trades emanate from. One way to look at it is that you could literally go and find a weekly uptrend, and you can find the moment on a 5-minute chart that it began. And that is the ultimate moment in time. It's not the goal. It's too hard to do that, but that gives you some idea of what I'm talking about. Make sense, everybody? Let me do this. Let me say that was the last slide. Let me say tomorrow I'm going to be here again, totally different topic. It's not going to be a review of my prior trades. Don't be confused. It's going to be what you need to do in your personal trading to be a successful trader. And it's about your own personal trade review because there is nothing more important, and yet nobody does it. There's a right way to do it. It's a 2-part process. and it is not going to be recorded. Today was recorded, I think, and tomorrow will not be recorded, so you do have to be here tomorrow if you want to see it. For one of the rare times I'm doing that, but it's not going to be recorded tomorrow, so you got to be here if you want to see it, okay? So with that, let's say I'm officially done because it's 6:04, and then I will hang around for any questions that you want to ask. So it's not about finding the perfect pattern, it's more about being perfect. Interesting comment. I'm not sure if I understand it. I'm not sure if it's sarcastic. I'm not sure if I get it. No, it's actually no. I assume you're being serious. Same time, yeah. Same time, same login. There will be a new email in case you forget, but same time, same login. Don, I would say no. You're not understanding. I assume it's a real question. You're not understanding it. It's about finding the right moment. Let's call it the perfect moment, which is easier than finding the perfect pattern. I'd rather have a perfect moment in a reasonable pattern. Yeah, I'd rather have the perfect, if this answers your question, I'd rather have the perfect moment in a reasonable pattern than a reasonable moment in a perfect pattern. That was a good way to say that. I would much rather have a perfect moment in a reasonable pattern than to have a reasonable moment in a perfect pattern. Boom. Does that answer your question? The last trade, it was a nice winner. That was Monday. It was short NEM on Monday, Carmen. It hit the targets, the last trade. I shorted. It dropped. Didn't you see the chart? The chart here. There's the chart. Target 1, target 2. It's been a very nice July, but I don't like to pull any punches. I had a losing day today. Not happy about that. Okay, could you explain what I just said? I think, Paul, I think I just explained it then, right? I think I explained it absolutely perfectly. Seriously, are there any more questions about anything at all? I will gladly sit here if you like. No, not example? Well, this was what I would call an example of it. Maybe not the best example, but this was what I would call an example of it, Paul. In that this opened right at an absolute key area. And after 2 minutes of trading, it went down a little, it came back a little. And I'm left with this thing to say, hey, if it takes out the low now, there's no bottom, and I find it very unlikely to take out the top. Is this the pattern I would choose to put on display as being the best short I've ever seen in my life? No, I wouldn't. And that's the reason I asked you guys to discuss it, because there are issues with it. But it's a reasonable pattern, and it had just a perfect entry because it gapped right to the area. Tried to go higher, couldn't go higher, boom, drop. Failed higher, great entry, perfect spot, reasonable pattern. Just what I mean. Does that make sense? And there are examples, all over. It's what I do all day, is try to find those examples for the most part. Yesterday you indicated that you really like LUV's chart. Please explain why. Given that it rejected 50, 53, 4 times. Well, let me pull over the charts there. I know I made money on LUV yesterday. I also know it never was a home run. Now, what's your question? What time of the day are we talking about? Oh, LUV? What LUV? Oh, I thought you were talking about J Blue. I'm sorry. What Jerry? Yesterday you indicated you really liked LUV's chart. Yesterday. I'm sorry, Jerry. I'm sorry. I thought you were talking about in the room. I played yesterday. I played J Blue short a couple times and made money. I thought that's what you're talking about. You're not in the room and you're not talking about J Blue. I'm totally confused now. So yesterday I was talking about. Do you mean Monday night? Oh, Monday night. Okay. So what was it? So this is a discussion comment. So I'm saying. All right. So Jerry, give me a yes or no. You're saying that I like this long. And you're saying, why do I like it long? Because it has this big resistance right up in here. Correct? Yeah, okay. That's what you're saying, right? That's the question. Why do you like it long when it has that resistance there? Right, Jerry? Yes, before I spin out. Okay. Because, Jerry, just a matter of what time frame we're talking about. The time frame I am looking, again, when I say I like it long, I didn't mean you jump in long at the moment I'm talking. What I meant was that this was the chart I'm looking at. See this monthly chart? And I was indicating the fact that this is a great support area long term because it's minor support and then kind of amplified by what's now become major support. So I like that low holding forever. I like that support area, and I was discussing how I like that despite the fact that it has not gotten above there yet. But I mean, what you want to see now, so what you need, Jerry, now, you have a great monthly chart. Now we need the trigger. Okay, so you don't just jump in long inside here. What you do is, like, ideally for me, what I'd love to see, I'd love to see the stock like put in a couple red bars, then gap over the top. I'd like to see after one red bar, it just puts in a big green bar over the top. I'd like to see some kind of action on the daily chart that now confirms the monthly is going to take off. Okay, when you're looking at a monthly chart, it's not something you're just going to jump into, at 3 o'clock in the afternoon. All of a sudden, it's got to be something that triggers. So. It's on the watch list, and the reason, like, I'll try and keep a whole bunch of those on the watch list because all of a sudden one will do something one day. It'll gap, it'll do this, it'll gap. Okay. Yeah. So I mean, in the meantime, if this helps answer you, you're confusing everybody saying that's what you thought, but you didn't want to trade against my insights. So I thought we're on the same page here. But there is nothing wrong, Jerry, with shorting the top of this on a day-to-day basis or as a 2 or 3 day trade, and then there's nothing wrong with going long at the bottom here. All I'm saying is on the monthly chart, this is one of the things on my list. And, coming down to the bottom here, that would be the perfect core entry next time, to take this right off the bottom on a daily buy setup, play it on the monthly chart. But between here and there, if it were to all of a sudden pop above this base, it's good to go as well, too. Okay? Paul, just very simply, minor support is where you have a very, very difficult resistance area, and then you get above it. And by getting above it, that area that's left behind is what at least I call minor support. So if you go to the monthly chart here, this was a difficult area to get through right here. And it's not a coincidence that once we got through this, that this becomes the support area going forward. That happens more than you probably realize. Minor support is the support you need to understand more than anything else. It's the only time we are guaranteed to have buyers there. Major support, as I call it, is nice. It shows that there have been buyers there. It shows that there probably will continue to be buyers there, but they could disappear at any moment. Minor support, that doesn't happen. We know there's going to be buyers there. All right, guys, any other questions? Good conversation. Good talk, Rusty. All right, guys. Looks like we're out of questions, so we'll call it a night. We'll see you guys tomorrow night at 5 o'clock. Tomorrow's going to be super boring, so have the TV on in the background. Bring something to read. Bring your Words with Friends on your phone to play while you're listening to me, okay? Seriously, it's going to be super boring. I'll put you to sleep tomorrow night. See you tomorrow. Have a good evening, everybody.